Welcome to Second Take, the show that focuses on the issues behind the news. Anglo American Platinum aims to treble its $100 million financial firepower, which is directed at further developing the PGMs markets. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Can you tell us about Anglo Platinum Group Metals Development Fund?
Yes, it's a group metals development fund, so it's not just looking at platinum and palladium, the first two P's that come into mind. There's iridium, ruthenium, and all the other platinum group metals, and it's all about marketing, and more marketing. There's been an intense program over the years by Johnson Matthey that has now been brought back into the fold of Anglo American Platinum itself, where they have brought in private equity partners and development managers, people who go out and look for deal flow, and they are extending that outside of the country. The initial search inside the country did create some development. The South African government itself is very keen on coming in with some sort of platinum play, in that beneficiation is their big buzzword, and we got 75% of the world's platinum. This is the base from which you should move, and they did create some activity here through High SA and the other hydrogen age initiatives that they've got, which are still on the go, and clean energy investments, etc. But some bigger ones also coming through now, with the fact that Anglo American Platinum is looking after this themselves and going into countries like America. There has been a complaint where the marketing has been too Eurocentric. We've been too dependent on Europe, and we've had a 2008 crash which saw demand fall, which saw platinum demand fall, which saw the price fall. We have a strike on our hands now, and it's not the time to sort of be paying workers more because they're in trouble. But the whole thing is to get this market developed, and I think the emphasis that they're putting on it is correct.
Why is a development fund like this necessary, and how much money is available?
Well, they've got $100 million firepower directly coming out of Anglo American Platinum. But what they're looking for is co-investment. If you can actually be seed capital in a bigger picture, you can do a lot more. You can take those funds a lot longer way. So they're looking to try and treble it with co-investment. At the moment, they've got $30 million directly in play, and then they've introduced a co-investor, through Bryanston Resources, which has put in another $20 million. So now you've got a $50 million play. They've only actually given out about $20 million. So there's still a lot to work on. There's still a lot of deal flow to come. They're working on a lot of that. And obviously they've got to do a lot of due diligence. It's not an easy area. You're going into new areas. You're going into innovation. There've got to be a lot of milestones. You've got to keep checking. If those milestones aren't met, then you've got to pull out of the deal. You've got to have all sorts of caveats, to protect that investment, because, money is tight. And $100 million in a situation like we have now with platinum is quite a lot of outflow. So they've got to make sure that they get their return.
Now, the development fund has invested in Primus Power as well as other companies. Tell us more about that.
Yeah, Primus is interesting in the US. Again, you see platinum going big into the energy space. Primus is looking at a flow battery. This flow battery stores power. Now, if you've got your sun power, renewing energy for your home, the sun doesn't shine at night, but you need to collect that energy in the day. And then this is what this device does from Primus, so that you can still turn on your lights and do everything you want to do at night because you've stored up power in this flow battery. Likewise, there's a lot of peaks and troughs in power generation, and the big thing about Eskom, it can't store its power. It burns that coal, it sets the turbines going, and it generates, and that goes flying through the transmission lines. If there's no offtake, they've got to live with that. They've got to live with that. It's too difficult to store. And then along comes the evening period, and everybody's having a bath together, everybody's turning on the TV together, it's cold winter, and the heaters are going on, and you've got a peak. So in order to try and lower that peak, Eskom says, no, you're going to pay a lot more, industry. If you start using our power during that time, you're going to pay a hefty premium. What Primus does is says, okay, we can shave that peak. So we'll come along, we'll collect during the non-peak in our flow batteries, and then when the peak arrives, you release that energy into your system. Their mines themselves need this. They need to level out the cycles. And so I think that in the energy space, there's quite a lot that could be done. And platinum, in this case, it's the metals we don't hear of much, iridium and ruthenium, playing a role.
Now, surely they must also be investing in fuel cell technologies.
Fuel cells, you know, the FC initials are big in platinum. You know, we've been hearing about it for a long time, but now we see it happening. You know, you see it in the mobile field. You see Toyota coming out with its fuel cell car, Hyundai coming out with a fuel cell car, Anglo American Platinum people in London driving around in a leased fuel cell car. The big thing is the hydrogen infrastructure. You know, where are you going to fill up with hydrogen? What are you going to do? So those are the things that have got to be worked out. But people who are looking far see the fuel cell as the engine that'll drive our cars in future. Big role for platinum there, platinum and only platinum. So that's going to be great on the mobile side. And then there's a lot of stationary potential fuel cells. They want to create a little mini grid community in the Free State where there are people now off grid. So that means they are too far from the Eskom grid to be connected economically. So they stranded, 34 of them. They're going to go there and create a mini grid using a fuel cell. Put it in the middle of the community, let them draw electricity from this fuel cell, see how it goes. And, you know, we have seen these in action at various environmental conferences, etc. They do operate, and the only byproduct is water. So I don't think that's going to harm the environment too much.
And out in the Free State, that's what you're hoping for.
Exactly. Yeah.
Surely it must be quite expensive, though.
That is the thing. They've got to come down the cost curve, and what it means when they come down the cost curve is normally means they're thrifting the platinum, or they're thrifting the platinum.
Which is not what you want.
Yeah, it's not what you want. That's what happens. In order to make things economic, you use less platinum, you use less of the platinum group metals, and that normally makes it economic. But I think it's part of the introduction of the product that you've got to have this situation of, you know, it's up on the high on the cost curve initially. Most inventions, unless they're really good, are like that. And then you sort of drag them down the cost curve with volumes. And perhaps it'll be the same story with a fuel cell. And perhaps, you know, one day we'll even be using fuel cells in our kitchen instead of, well, along with our washing machines and fridges.
Well, thank you very much, Martin.
It's a great pleasure, Shannon.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.